No confirmation of recording yet. Okay, good. So this will be part of your second long exam together with insurance companies. Financial statement analysis for investment banks. Financial statement analysis for investment banks together with regulatory issues. Regulatory issues. So what are investment banks? What are investment banks? Now, to be clear about this, investment banks are not banks in the way you know banks to be banks. I repeat, investment banks are not banks in the way that you know banks to be banks. The banks that you know, BDO, Metrobank, BPI, those banks that you know, they are actually called commercial banks. They are called commercial banks. Investment banks are different from them. I repeat, investment banks are not banks the way you know banks to be banks. So, what is an investment bank? What is an investment bank? An investment bank is defined as a firm performing the functions of creating capital for companies, government, and other entities. Let me repeat, it is a firm performing the functions of creating capital for companies, government, and other entities. What do we mean by creation of capital? Well, companies, we'll call them businesses, companies, government, and other entities. We simply call them businesses. Companies would need funding in order to acquire more investments as well as in its operations. For a business to operate, it needs funding. Kailangan ng pondo para gumana yung negosyo. The business would need to buy assets, would need to buy property, plant and equipment, inventory, okay? It needs an amount of cash, etc. Where will the funding come from? It comes from capital. Kailangan ng puhunan. It would need a source of funding, which we call capital. So investment banks basically help companies, government, and other entities, I'll just call them businesses, raise capital. So you can think of investment banks as the middleman between businesses and savers. Between businesses and savers. The role of the investment bank is to create capital for businesses. So to create capital, the businesses would have to issue bonds, would have to issue stocks, bonds and stocks. So the investment banks will buy them, the investment banks will buy them and would sell them to the final investors, which we will refer to as savers. We shall refer to them as savers. So the investment banks will basically forward the funds to the businesses. And when the investment banks are successful in selling them to investors or savers, the investment banks will be able to generate income for itself. Okay? Think of it this way. The businesses will issue bonds and stocks to the investment bank, and the investment bank will forward the funding needed for the business. The investment banks will therefore sell those stocks and bonds to the final investors, which we call savers, and the savers will forward the money to the investment banks. Okay. Functions of the investment banks include the following. Number one, bringing new securities to the market. Bringing new securities to the market. Two, underwriting. Three, market making. Four, client-related trading. Five, proprietary trading. And six, advising on mergers and acquisitions. Mergers and acquisitions advisor. Okay? The role of the investment banks. The functions of an investment bank include the following. Bringing new securities to the market. Underwriting. Market making. Client-related trading. Proprietary trading. Then you have mergers and acquisition, particularly advisory. Advisory on mergers and acquisition. bringing new securities to the market. Let's talk about the first function. Okay. How do investment banks bring new securities to the market? So let us say company A balance sheet is here. Company A needs funding. Company A needs funding. So you have here company A balance sheet. Company A will have to issue bonds and stocks. So the investment banks will be the one to buy them initially. Kailangan ni company A ng pondo. Investment bank, siya na muna yung bibili. No? Buy those bonds, those stocks, and the investment banks will forward the money to the company, giving funds to the company. So the company's balance sheet, there will now be cash on the left side, which can be used to acquire property, equipment, whatever. And in the right side, depending on whether bonds or stocks are issued, there will be liabilities and or equity. The investment banks will forward the securities to the final savers. This is us, the investors. Okay. And of course, we'll take away our money in return for those bonds and stocks. Okay. Now, we have to make some distinctions about different types of issuances. This transaction that you can see here is a primary offering. This is a primary offering. Primary offering happens when there's a sale of newly issued shares. Okay? A primary offering is a transaction between the issuing company and the investor. The seller is the issuing company. Okay? Primary offering when newly issued securities are being issued, of course. Newly issued securities are being sold from the company issuing them. So if this is Jollibee Food Corp, so you would find here the bonds and stocks of Jollibee will be sold by Jollibee itself to the final investors. We call that primary offering, a transaction between the issuing company and the investor. Primary offerings can be an initial public offering. This is the first time that stocks will be given to the investing public. If this is the first time that the funds, no, funds will be raised by issuing stocks to the public. So any one of us, we can buy the stocks of Jollibee, we can buy the stocks of BPI, we can buy the stocks of Cebu Pacific. Why can we buy them? Because they are publicly listed. They are registered in the stock exchange. So since they are publicly listed, strangers to them, like us, we can acquire their shares. Okay? If this is the first time that they do that, we have an initial public offering. Initial public offering. Recent examples of initial public offering include Convergys, no? Convergys, publicly listed sila, no? Last year. They were publicly listed just last year. And all of us, we can buy the shares of Convergys. Okay? So that's an example of an initial public offering. Last year, they issued shares. So initial public offering happens when the company's stocks are first time being introduced to the public. Now, what if Jollibee will raise capital in the primary market again? So Jollibee is no longer a new company to the public. Jollibee is already a veteran in issuing shares to the public. We call that a seasoned offering. Seasoned offering when it is no longer the first time that shares will be issued to the public. Okay? Let me repeat. A primary offering is a transaction between the issuing company and the final investor. Okay? The issuing company is therefore going to sell its own shares or bonds to the investor. That's a primary offering. It can be an initial public offering, IPO, when this is the first time that shares will be introduced to the investing public. Or it can be a seasoned offering when it is no longer the first time that shares are being traded in the public. Now, private placement, on the other hand, is a transaction between the company and a private investor, not just anyone in the public. This is not open for everyone. We call this private placement. Okay? Private placement, a transaction between the company and someone that the company has chosen to put funding to them. It's not the public. Okay, prospectus. Let's talk about the prospectus. The investment bank shall prepare a prospectus on the issuing company. Prospectus, in a general sense, is a legal document containing the relevant information about the issuer. A legal document containing info about the issuer before bringing new securities to the market. Bringing new securities to the market means the investment bank will act like a celebrity manager for the company. Both the investment bank and the company shall take a tour. We call this a road show. We call this a road show. They are going to meet different people in order to introduce company A to them. Company A is a very good company and company A would like your funding. Will you invest in company A? An investment bank roadshow would do. Okay? Kapag sinabi nating investment bank roadshow, we're basically giving a debut for the company. The company's management, the manager of company A, and the investment bank, they're going to take a tour, both literally and figuratively, meet potential investors, the potential savers who's going to put their money on the company, and or analysts. Analysts are those people who are following the stock. They are they are giving their critics, they're giving their analysis, no? They're giving their thoughts, they're giving their expert opinion on the company's position and performance, paving way to the decisions made by potential investors. So the company's management and investment banker during an investment bank roadshow, they're going to meet different people, putting the company in some sort of a debut. They're going to meet potential investors and analysts. Okay. Now, this is going to happen through the process of underwriting. Okay? Through the process of underwriting. Actually, in an underwriting transaction, it's not it's not all the time that there will be only one investment house or investment bank, but rather a group of investment banks. The group of investment banks are like a gang, no? Mukha silang gangster. That's why we call them sindicato. Okay? The term to refer to them is the underwriting syndicate. Okay? The word syndicate in English doesn't necessarily connotate something evil, no? Hindi katulad ng word na sindikato sa Tagalog. But you can think of it that way. A syndicate as a group. Okay? An investment bank will create a syndicate to do the underwriting transaction. Company A is going to issue liability and equity securities to the investment bank. The investment bank will give them their funding. The investment bank would look for the final buyer of these securities, the investors or savers, and therefore the savers will, in return to those securities, give their money. Now, how does an investment bank make money? How does an investment bank make money? So what the investment bank will basically do is the investment bank is going to buy at a low price and sell at a higher price. The difference is what we call as the underwriting cross spread. The difference between the buy price and the sell price. This represents the profit of the investment bank. Okay? So we call this the underwriting gross spread. Underwriting gross spread. Now, in underwriting, investment banks are active participants here. They act as the buyer for the company and the seller for the investor. Okay? In an underwriting, the investment bank is not simply earning commission. Hindi siya nangongomisyon. Ang ginagawa niya, nagma-merchandise siya. Mukha siyang merchandising, no? Mukhang bumibili siya at nagbebenta. Buy and sell, no? The investment bank is an active party here, a buyer to the company, a seller for the savers. So, how the investment banks earn is they buy at a lower bid price, sell at a higher ask price, difference of which is called the underwriting gross spread. Firm commitment is usually the description being used to describe what investment banks do during underwriting. There's a difference between firm commitment and best efforts bid. Okay? There's a difference between firm commitment and best efforts bid. Firm commitment and best efforts bid. There's a difference between the two. You can think of firm commitment as the true underwriting. The underwriter buys all the securities at a specified price. Okay? The underwriter, this syndicate of investment banks, they will buy all securities at a specified price and then look for savers who are willing to buy from them so that they can sell. The syndicate, the underwriting syndicate, can sell it to those savers. So in a firm commitment, the underwriter buys all securities at a specified price. In a best efforts bid, on the other hand, the investment bank basically only attempts to sell the security. Sa best efforts bid, nangongomisyon lang yung mga investment bank. Hindi nila pinapangako na bibilhin nila. Ang pinapangako lang nila, gagawin nila yung best nila. Okay, I'm going to do my best to sell this. But if I'm not going to sell this, at the end of the day, I'm going to return the stocks to the company. Sabi ni investment bank, I'm going to try my best. I'm going to try my best to sell the securities to the final savers. If I cannot make it, I'm really sorry. I'm going to return it to the company. So in a firm commitment, the risk of no sale will go to the investment bank. But in a best efforts bid, the risk, when nobody would like to invest in the company, it will be on company A. You have to understand, however, that despite of the differences, in both cases, there is settlement risk for the investment bank. The other side of the transaction will not deliver. The other side of the transaction will not deliver. So for example, the investment bank, the firm commitment, walang bumibili. May settlement risk, no? Walang magagawa ang investment bank. Best efforts bid, ibabalik niya kay company A dahil hindi nabenta. Ganun naman pag best efforts bid. It's possible that company A cannot reimburse investment bank on those amount, no, for the amount due. Anyway, so in both cases, settlement risk exists. In both cases, settlement risk exists. It's the risk that the other side of the transaction will not deliver. The risk that the other side of the transaction will not deliver. So, do you have any questions, especially on underwriting? Do you have any questions, especially on underwriting, before we continue? Please raise them now. Okay, wala talaga? No questions? Okay. So I would assume that silence means no. Silence means no. No questions, you mean? Okay. Next, we have market making. The next investment bank function that we have is market making. Market making means the investment bank is a participant in the secondary market. Okay? So if there is an investor who would like to sell the securities, the investment bank will buy from those investors. Okay? The investment bank will buy from whoever wants to sell. Then furthermore, when there is someone who would like to buy the securities, the investment bank will sell it to them and the buyer will have to pay. Okay? Market making means the investment banks facilitate the secondary market. In the secondary market, the issuing company is no longer a participant here. In a secondary market, the issuing company is no longer a participant here. So what happens during a secondary market transaction? Ano ang nangyayari kapag meron tayong secondary market transaction? In a secondary market transaction, the investment banks basically would buy from investors and sell to other investors. The issuing company is no longer involved here. Okay? So what's the difference between primary markets and secondary markets? In a primary market, seller, okay. In a primary market, seller is the issuer of the securities. Okay? In a primary market, the seller is literally the company who would need the funding, yung nangangailangan ng pondo. Whoever is issuing the shares and the bonds, that's the seller. Then the final investor will be a buyer. This is a primary market transaction. Primary market transaction. Meanwhile, in a secondary market transaction, investment banks would simply make a market for the security. So may mga stocks dyan na hindi masyadong mabenta at mahirap bilhin. What happens here is the investment bank will act as some sort of a dealer. Investment bank will take the stocks from those who want to sell them, being those people, and sell the stocks or bonds to whoever wants to buy them and receive money from those people. In a secondary market transaction, the transaction is among naman tawag dito, among investors, not involving the issuing company anymore. Now, paano kumikita yung investment bank dito? Paano kumikita yung investment bank dito? How do investment banks earn? Similar to what I have described a while ago, there's a difference between the buy price and the sell price. So we call this buy price or bid price. The investment bank will buy at a lower price and would sell them at a higher price. So ilang presyo ang nakapost? Ilang presyo yung nakapost? Dalawa yung presyo na nakapost. Magkano kapag si investment bank bibili? Bibili siya ng mas mababang presyo. Magkano pag ibebenta ng investment bank? Maniningil siya ng mas mataas na presyo. The difference, we call it a bid-ask spread. We call it a bid-ask spread. Okay, no questions so far? Wala bang mga tanong dyan?
Sir, I have.
Okay, okay, Queenie? Yes?
Yes. paano involve yung companies like kapag sa primary market? I'm not sure I can see the difference between the second market and the primary.
The difference between a primary and the secondary market.
I
Okay.
mean, that's yung concept, but like, paano involve yung companies? Kasi parang
Sa
same lang. Like, sa primary market, di ba, there participants rin there.
the
Yung
participants are,
companies na nag-i-insure.
yeah.
Yeah. So, like in reality, how, like, an example, I'm not
Okay.
sure if I can picture it.
Okay. So, demonstrate an example. Distinguish a primary market from a secondary market transaction. Is that what you mean?
Yeah.
Yeah. So, example, Jollibee needs funding. Jollibee will go to an investment bank. Jollibee Foods Corp need funding. The Jollibee will issue its own securities. Okay? Issue its own securities to the investment bank, which will be sold to an investor. Whoever is willing to invest money to Jollibee Foods Corporation. Primary transaction. A secondary transaction, on the other hand, happens when the stocks that we are talking about for Jollibee, for example, they were already issued. Sino na ang magbebenta ngayon? Hindi na si Jollibee. Kaninong stocks to? Kay Jollibee. Ulitin ko. Whose stocks are this? This investor is holding the stock of Jollibee, but it is no longer in the hands of Jollibee. This will be sold to another investor who is willing to be an investor of Jollibee. This new investor didn't get the stock from Jollibee itself, but from just another investor. We call this a secondary market. Is that clear?
Yes, sir. Thank you.
Malinaw na. Okay. So, yun. The issuing company in a secondary market is no longer involved. So, stocks to ni BPI, stocks ni BPI, hindi na involved si BPI dito. Ibig sabihin nun, stocks ni BPI, hawak ng isang tao na hindi si BPI, syempre. Hawak ng isang tao, tapos ibebenta niya sa ibang tao. We call that a secondary market transaction. Okay. So investment banks benefit from a secondary market by buying at a low price, selling at a higher price. We call the difference the spread, the bid-ask spread. Okay. Investment bank functions include the following: client-related trading, proprietary trading, mergers and acquisitions. Client-related trading and proprietary trading means the investment banks engage in buying and selling securities on behalf of their client. They're buying and selling on behalf of someone who hired them. We call that client-related trading. So, say for example, Company A would like the investment bank to buy and sell securities on their behalf. So the investment bank can buy and sell securities and profit from it. The profits going to the client. So they're going to charge some fees, or the investment bank itself will want to earn from the trading for his or her own account, for its own account, proprietary trading. So trading means buying and selling of securities. Okay? Buying undervalued securities, selling them when the price goes up. Okay? The value is being acknowledged. The price goes up. So the investment bank can make those buy and sell transactions in behalf of the client or in behalf of itself. That's the difference between client-related trading and proprietary trading. So what can investment banks trade? Investment banks can trade equity securities. The most common, yung mga stocks, no? Stock market, equity securities. Fixed income securities, like bonds. We call them fixed income securities. Credit products, like mortgage loans. We call them credit products. Mortgage loans. More on that next time. And it could be commodities, like gold, oranges, soybeans, silver, nickel, whatever, commodities. Okay? So investment banks, you may imagine them buying and selling stocks. Those are equity securities. Other than buying and selling of stocks or equity securities, they can also engage in buying and selling of bonds, buying and selling of fixed income securities, bonds, no? Credit products, this includes mortgage loans. Pwede silang bumili ng mga mortgage loan products. More on that next time. Commodities, yung mga nakikita nyong futures contract, forward contract, options. Okay? Going short, going long on the silver. Going short, going long on oranges. Okay? These derivatives of commodities, investment banks can also take part in buying and selling of these items. Now, the final thing that I would like to talk about would be mergers and acquisitions. Mergers and acquisitions. A merger and acquisition happens when two companies combine. Okay? Two companies combine. Say for example, company A would like to acquire company B. The question is, at what price will company A acquire company B? What is the right price? In order to answer that, we need to know the value of B. Investment banks will provide advice to company A based on that information. So the investment bank may conduct services like determining the value of company B or due diligence. These are some investigations regarding company B. Is company B financially sound? Wala bang problema yung financial position niya? Is company B legal? So there would be a financial or a legal due diligence. Of course, investment banks usually on the financial side. Okay? So what are the additional functions of investment banks? Investment banks can engage in trading, buying and selling of securities. The investment bank may trade on its own account, proprietary trading tawag doon, or the investment bank may do it on behalf of the client, client-related trading. May yung mga pwedeng i-trade, equity securities like stocks, fixed income securities like bonds, credit products like mortgage loans, and commodities like derivatives on metal, precious metal, as well as agricultural produce. Okay? Finally, investment banks can provide advice on mergers and acquisitions. Providing advice on mergers and acquisitions. For example, company A is going to acquire company B. Company A's concern would include what's the right price. The existing owners of company B will also be concerned at what price to sell. In doing so, the investment bank can provide services like determining what's the appropriate value in order to act as the basis for pricing. Magkano bibilhin ni company A si company B? In doing so, the investment banks may also conduct an investigation of company B. We call that due diligence, no? Due diligence. Now, let us proceed to the issues surrounding investment banks. Issues surrounding investment banks. Among the among the uh, among the issues surrounding investment banks include deregulation. Deregulation. Among the issues surrounding investment banks include deregulation. So when we say deregulations, regulations are being stripped off. Regulations are being reduced. Binabawasan na yung regulation sa investment bank. Okay? Accordingly, regulating investment banks will hamper the capital flow, no? Nalala niyo dati, 'di ba, yung discussion ko on the flow of capital, no? Ideally, funds should flow from those who have excess of it to those who need it. Okay? So, regulations will make it harder for capital to flow. The regulation, therefore, in the recent years, there is a trend towards the regulation. There is a reduction on the number of regulations. The problem with investment bank is that before, investment banks, they used to be the gatekeepers. Dati-rate, no? Let's say 100 years ago. 100 years ago, the existence of investment banks are attributed to their role as gatekeeper. Example, yung company hindi stable. The company is not a financially or a legally sound company. Maraming issue. The investment bank should act as a gatekeeper. Uy, company X, you are not compliant with you're not compliant with certain laws, regulations, or morals, no? Moral standards. So therefore, I'm not going to act as your investment bank. Ganon dati yung pag-iisip ng mga investment bank. But at the end of the day, paano ba kumita yung investment bank? Investment banks earn from the transaction. So if someone would want to issue securities, whether it's sketchy or not, the investment bank will earn. So they have a role of gatekeepers 100 years ago. Okay? Kaya naman nagkaroon ng investment bank para yung mga company na hindi financially stable, hindi sila dapat nag-i-issue ng shares or kaya bonds. Diba? But you have to understand that investment banks, by the very nature of the business, are profit-oriented. Okay? Profit-oriented sila. So, hanggat may transaction, may kita sila. May transaction, may kita sila. May transaction, may kita sila. So, the regulation will pose an issue on how investment banks would work. Tatanggalan ba natin ng deregulation? Okay, how are the investment banks going to respond? Nagkaroon ng time sa US, hinihiwalay nila yung investment banking sa commercial banking. Investment banking is separate from commercial banking. But nowadays, hinahayaan ng magkaroon ng group na may commercial bank, na may investment bank. Example, BDO. BDO has BDO Capital. RCBC. RCBC, that is a commercial bank. RCBC has an investment bank called RCBC Capital. BPI is a commercial bank, but BPI also has a subsidiary acquired BPI Capital, an investment bank. So hindi na hiwalay yung role ng commercial banking tsaka investment banking. Pwede na sila ipagsama sa isang family, no? Sa isang grupo. Okay? Then in the US, there is an issue of the revolving door. There is an issue on the revolving door. Ano ba yan? Revolving door na yan. Example ng revolving door. Okay? Uh, Expert, no? Na CPA. Magaling mag-minimize ng taxes. Okay? Magaling mag-bawas ng taxes legally. I-hire ng BIR para maging commissioner nila. Tapos, yung mga companies, kung aalis na sa BIR yung taong yon, i-hire nila yung taong yon, yung mga accounting firm, para gumawa ng tax minimization techniques. Nakuha nyo? Yung regulator mismo, nagkakaroon ng mga executives, mga director sa regulator, kung saan hinahire sila ng mga firm para ma-circumvent yung regulations. When we say there's a revolving door, what it basically means is that the executives of top investment banks, they are being hired by the government as consultants. And when they retire, they go back to the companies, the investment banks. And when they retire, they go to the government. So yung mga tao na nagre-regulate, sila mismo yung mga taong nakikinabang yung career nila sa investment banking. Okay? Gagawa sila ng regulation, turuan nila kung paano madaya, no? Medyo low-key na daya dun sa regulation. Okay? We call that a revolving door. A very similar company to an investment bank is the Securities Brokerage. Similar to an investment bank, Securities Brokerage. Closely related to an investment bank. So what is a securities brokerage? Let me describe it this way. Rather than issuing securities, securities brokerage, they do not help in the issuance of securities, yung primary market. It has a distinct role. Securities brokerage facilitate the trading, no? Involved in the trading of securities in the open market. They pair buyers with the stock and earn commissions. So example, I would like to buy Jollibee securities. The securities brokerage would like to find someone who is going to sell Jollibee's securities at the price that I'm willing to buy. Popular securities brokerage include Call Financial, no? Call Financial, no? Securities brokerage. They are not the buyers and seller of the stocks. Whenever there is a buyer and a seller and they agree on the price, Call Financial will take away 0.5%, something like that, a fraction of 1% from both the buyer and the seller. So, dun siya kumikita, dun sa mga barya-barya sa trading. They only facilitate buy and sell transaction between investors, unlike investment banks who are really going to be actively the buyer to the seller and seller to the buyer. Si securities brokerage, nambubugaw lang, no? Sinong buy, sinong sell? Okay, hanapin natin yung buy, tsaka hanapin natin yung sell. Pag pinair na natin sila, binugaw na natin, hihingi tayo ng commission. Dalawa. Now, there's a difference in the orientation between investment banks and securities brokerages. The orientation of an investment bank is institutional. The orientation of an investment bank is institutional. We're talking here about the agencies of the government, the large companies. If they want to issue shares, buy shares, issue bonds, buy bonds. Meanwhile, securities brokerages, SB, they deal with smaller players, the investors who are individuals, whoever wants to buy and sell stocks and bonds, no? Whoever is buying and selling stocks and bonds. So this is an example of an investment bank. Okay. Swiss Bank. Anyway, I'm going to stop sharing for a while and stop recording.